Hi guys, this is Dr. Sadadivam once again with you. Guys, this is a continuation of an earlier video. I hope you would have gone through that video. It's a 5-minute video giving you an introduction to this whole video, guys. Now, we have talked about an analogy, which is, would you like to be a sand in a sand dune waiting for the wind to blow over and take you wherever the wind takes you, or you want to have complete control on your investments? That was what we talked about. And the one that we are seeing happening between Russia and Ukraine, let's remember the fact that this market fall that we are talking about did not start with this Russia invading Ukraine. In fact, this process started way back in the month of October, when we reached the highs of 18,700. Remember, the stock market pundits were talking about the Nifty becoming a major and the Sensex becoming a senior citizen and all that. All those jokes were around. In fact, we were also witness to lots and lots of stock market pundits professing that the Sensex will be hitting maybe 70,000 and experts saying Nifty is going to hit 20,000, etc., etc. They will eventually hit. Absolutely, there's no doubt about it. We will come back to that later. But some of these instances which are happening, right, be it the Russian-Ukraine crisis or the rise in commodity, everything that is being talked about in the market, let's talk about this crisis for some time, and then we will, discuss about what kind of an approach we should take in these kind of calamity kind of situations, right? So whenever we look at this kind of look for a strategy during these trying times, these adversarial times, remember guys, we need to have an approach which is a judicious combination of trending earnings and trending prices. Because if you look at the past history, some of the events in past history, things are exactly happening like a playbook, like earlier it happened. Because as we discussed, these situations are not new at all. We have seen what happened in Afghanistan, we have seen Iran-Iraq war, we have seen the recession in 2007, we have seen the dot-com bubble in the year 2003 approximately, we have seen invasion of Kuwait in 1990, we have seen Iran-Iraq war, we have seen a lot of such things, right? We have seen Corona during the last year. Look at what is happening in Russia and Ukraine. This is not very different from what happened during the Kuwait war, right? Invasion of Kuwait by Saddam Hussein in Iraq, right? Russia invading Ukraine is something similar to a very strong army invading a small country, right? But if you remember this invasion of Kuwait, what happened? The coalition forces sprung into action. They pushed them back and a ceasefire was declared. But those of you who remember those times, you will remember that once the war happened and everything cooled off, the markets bounced back. And they rose to such levels which was higher, much higher than when the war started. Why go that for 30 years? Look at COVID 2020. When the COVID started, I think it was, the Nifty was somewhere in the range of 12,000, 12,500, 13,000 approximately, right? It came down to, I think 8,000. I think that was in the month of May or something like that. Came down to 8,000 and it sprung back 30,000 and went up as high as 18,700, guys. Can you believe this? 18,700. I'm not talking about past decades. I'm talking about last October. The same thing is happening now. Even when Iran-Iraq war happened, this invasion of Kuwait went through some research materials, your S&P, your Dow Jones, your Nasdaq, your SGX, Nifty, they all reflected the same trend, guys, even during those. Look at 2003 when the IT bubble happened. Interest rates were also raised during that time. It's not just the IT bubble. Interest rates were increased in the United States at that point of time. Look at the statistics between 2003 and 2007 or 2008. In fact, the Indian market did so well during that period, guys. 2003 and 2007 was the best phase of the Indian stock market. I've made another video on the journey of stock market in India for the last 20-25 years. We will be giving that description, that link in the description. Do remember to watch that. Everything is happening like a clear-cut, well-defined textbook case, right? Now, as far as this Russia and Ukraine is concerned, we've got nothing to do with them. We don't share any borders with them, right? But things happening there, they are affecting. It is something like two neighbors are fighting. They're throwing stones at each other. So normally when in this kind of a situation, we are always concerned that one of the stones might hit our window also, right? So some of these instances which are happening there, we can't be 100% sure that we are completely insulated from those events. They do have some kind of an impact, because we see those impacts happening in your rise in commodity prices, your shortage of containers, your semiconductor issues, because the whole industry is interlinked. Because anything happening there has some kind of an effect on the supply chain in some way or other, right? Food prices are increasing. At least I think 25% of the whole world's wheat comes from your Russia and Ukraine. The whole consumption of wheat in the world is somewhere around 200 tons, right? 200 million tons. It's 200 million tons, out of which I think 40 million tons comes from Ukraine and Russia. Now India is planning to export around 7.5 million tons to these countries in order to cool off those prices. So probably, let me also share this with you. Next year, government of India is planning to export around 15 million tons. We have so much of food grains available in our FCI go down. So let's see how government is going to, tide through the situation. We have got excess wheat in all the FCI go downs. You're capable of exporting 15 million tons. But let us see what the government, it's a separate video and I will be putting a separate video on this. Now coming back to this war story, we really don't know how long will this war last, because as long as it lasts, it will have its effect on the stock market, guys. Let's be very sure about that. Initially, what Russia thought would be a walk in the park. They thought they will be able to take over very easily, but that didn't happen because people are putting up a very, very tough resistance, guys. I don't want to go into the merits of who is right and who is wrong. We will not take the stand. We'll take the same stand that the government of India is taking. That is to have a neutral stand, because government of India wants peace. I've given excerpts of Prime Minister Narendra Modi ji's speech, which was made at the BJP's headquarters 2-3 days back. I've put that video in which I've explained all these things. So we will take a neutral stand as far as the Russia and Ukraine war is concerned. But at the same time, since the impact is felt on the stock markets and our stakes are involved in that, we need to be cognizant of what is happening at the international level, because anything that happens is going to affect your investments. Okay guys, we have talked about some of the old instances, old events in history. One thing is very sure. Whenever the markets go down like this, the market comes up. It's something like a sine wave, right? But whenever the markets bounce back, please remember one thing. Bull runs are fast and furious, guys. Bull runs are very fast and furious. But once they reach a certain level, then they consolidate for some time before they go up. We are in that process of consolidation now. There is a need for us to see opportunities and then invest, because we need to put our money where the mouth is. Please remember, most of the alpha that we are talking about, the profits from the stock market, they all get developed in 8 to 10 months. If you miss that crucial period, then you are gone. But now the question is, how to find out that crucial 8 to 9 months? How to know that the stock market is at the bottom? How do we know it is at the top? Guys, no market pundit in the world will be able to say that, because if that magic wand was available, everyone will be a millionaire. So let's be cognizant of that fact in the first place. Whenever we get into the stock market, that's very, very important. So there's nothing called the perfect time for investments. In fact, nobody knows when the war will end. But one thing is sure, the war will end. It's not going to continue indefinitely like 100 years war. Obviously, we all know that. Now, what is extremely important is we need to see what kind of macro impact it has. What kind of an impact it has on the macroeconomic climate of the country. including the companies and the corporates. Remember one thing, guys. We are marching towards a $5 trillion economy. We're currently at 2.5 trillions approximately, and we are marching towards this $5 trillion economy. Maybe in the next 2 years or 3 years, time will say. But we are working towards that. It might get delayed by 6 months or 1 year because of these unforeseen developments. But yes, we have to hit that target of 5 trillion in the next 3 or 4 years. And to reach this economy of 5.5 trillion, how many years did we take? More than 75 years. Since the independence, it took 75 years for us to reach a $2.5 trillion economy, which we are currently. And we are talking in terms of growing to 5, which is another 2.5. So the time that took 75 years in the history of our country, we are trying to travel that in 2.5 years. Now imagine, where is this money going to go? Where will this money go? Answer is very simple. It has to come back into the stock market. It has got nowhere else to go. Now look at some of the indicators happening in the Indian economy. Look at the 3-year and 5-year visibilities of all the corporates. Look at the corporate earnings. Everything is extremely positive. Everything is extremely positive. Look at all these corporate companies, the kind of growth estimates they have in the next 3 or 4 years. And the manner in which India as a country is growing is something that needs to be seen. Your PLI, your production link incentives, and India is going to become a manufacturing hub for the whole world. And apart from that, as far as services are concerned, we already have a very, very strong position. Not just that, look at tax collections. Month on month, we are crossing target of 1.5 lakh crores of GST tax collections. It's not just GST tax collections. Look at direct tax collections, you look at GST collections. Look at high frequency indicators. They are registering a growth month after month. Look at PMI index, Purchasing Managers Index. That is also getting. Infrastructure push is happening. Government induced capex, private induced capex, your dedicated freight corridors, investment in the infrastructure, logistical costs. Today the logistics costs are too high in India. I'll be putting up another video just to compare the logistics cost of transportation in India and China. Let me tell you, India it's more than 10-12%, whereas in China it's 2-3%. There is a separate video on that. But we will not stay in that situation for long. We are improving. Over a period of time, we will be able to bring down the costs. A lot of things are being planned by the government of India. Your inland waterways, your dedicated freight corridor corporation, your construction of highways and other infrastructure projects, everything is your high-speed trains, opening of new airports, opening up of bank accounts, everything has connection with each other, right? All moving towards growth of the economy. Now, we are not in a macroeconomic class, all said and done. But why are we discussing this? With all these building blocks, basic building blocks in place, one can be sure that we will be achieving this $5 trillion economy in the next 2-3 years. And once that happens, the question once again, let me ask you. We are going to achieve in the next 2.5 years what we have achieved in the last 75 years. Like $2.5 trillion today to $5 trillion. Where is this money going to go? It has to roam around inside. It has to come back into the stock market. So do you think it will be very surprising if Nifty reaches 40,000 or your Sensex reaches 1 lakh in the next 2 years or 3 years? Absolutely not. It's not a surprise at all. I put up another video which clearly talks about the journey of stock market in the last 25 years. Do watch that. Because in 1995, if anybody had told you that the Sensex will reach 60,000, you would have laughed it off. I was in the regional office of Maruti selling cars those days. I was a territory sales manager. I never thought, my God, 18,700 in the Nifty, unbelievable, incredible. And that is what is going to happen in the next 3 or 4 years. I don't have exact data to say that, but yes, we are on the right path. We are moving towards that direction. Keep investing, never try to time the market because you cannot. This volatility will continue. Look at India VIX today. India VIX, it is at 32, but now I think that has come down to maybe 25 or so. We cannot call the market a stable market till such time the VIX comes down to a level of 16 or 17. We don't know when that will happen. So let's keep investing, and let us make the best from this all. Okay guys, this is Dr. Sadashivam signing off till we meet again. Bye bye. Jai Hind.